Well, hello everyone and welcome to this webinar presented by the IFRS Foundation. I'm Jonathan Labrey. I lead the integrated reporting team at the IFRS Foundation and I'm your host today. First, we have a few housekeeping points. We really would encourage you during the webinar to ask your questions using the Q&A window for today's topic of the future of integrated reporting and integrated thinking. We're not going to get to all of the questions today, but they help us both in terms of shaping the content of future webinars and also to consider our work in the future, including our communications. The webinar is being recorded today and will be available after the event on the IFRS Foundation's Knowledge Hub. We have closed captioning enabled so that you can turn it on in Zoom. Live closed captioning won't be 100% accurate, but we hope that it helps with the accessibility of the content of today's webinar. It's also important to point out that the information and topics that are being discussed today, however useful, do not constitute implementation guidance from the IFRS Foundation. So I'd like to extend a very warm welcome to everyone joining live from all parts of the world today, as well as those who are listening on demand. And just look at the breadth of participants today, with registrations totaling over 2,800 people from 141 countries, spanning finance and sustainability professionals, consultants, corporate reporting executives, as well as members of the accounting profession and academia. A truly great range of participants in today's discussion. And the discussion topic is the future of integrated reporting and integrated thinking. We will discuss how the concepts and principles of integrated reporting are being embedded within the work of the IFRS Foundation, as well as the business case for the integrated reporting framework, how it enables a more connected information package for the capital markets, and will give practical insights on how preparers who are applying the ISSB's sustainability disclosure standards can use the integrated reporting framework, and conversely, how integrated reporters can apply the ISSB standards. Now, we're going to refer during the webinar to a number of resources that have been developed by the IFRS Foundation to support market adoption, and we'll make sure that these are added to the chat as we go along, and we will also send them to you in a follow-up email. And we'll also make sure that you receive a copy of today's slides. So before we continue, I would also like to highlight the IFRS Foundation's Integrated Thinking and Reporting Conference that will take place just 2 weeks today on the 3rd of April in Tokyo, Japan. This flagship event will bring together the IFRS Foundation's leadership with global businesses, with the investors and policymakers to explore the future of integrated reporting and the IFRS Foundation standards. Attendees will hear directly from the IASB and ISSB leadership and gain practical insights from companies on enhancing the quality of their corporate reporting and engage with experts in interactive sessions and networking opportunities. So please do visit the conference webpage for more information, and we look forward either to seeing you there or online, because it is a hybrid event, so it's possible to register and join us online during the sessions. Now, who will be the speakers on today's webinar on the future of integrated thinking and integrated reporting? Well, to lead off the discussion in a moment, I'll be introducing Nick Anderson, who was appointed as a member of the International Accounting Standards Board in 2017 and reappointed to serve a second term in 2022. Nick has over 30 years of practical experience, mainly as a buy-side investor, using and supporting the development of high-quality financial reporting. And I want to welcome our guest speakers who will bring expertise from different perspectives, from corporates, from the accounting professionals. And so we're delighted to be joined by Carolynn Chalmers from the Good Governance Academy and the ESG Exchange, from Dr. Girella, my colleague at the IFRS Foundation, and by Stathis Gould from the International Federation of Accountants. Now, before we turn to our speakers, I'd just like to take a moment to frame today's conversation about integrated reporting, to really think about how this connects with the IFRS Sustainability Disclosure Standards and support more effective corporate reporting. And so to do that, Laura, I wondered whether you would be able to kick us off, please, and explain what integrated reporting is, where it originates from, and how it's evolved over time into its current status, and why does integrated reporting matter today? Over to you, Laura.
Thank you so much, Jonathan, and good morning, good afternoon, good evening, everybody. It is great, actually, to be here. So let me take your question and try to respond bit by bit. First of all, what integrated reporting is about. Actually, let me start by saying what integrated report is not. So integrated report is not a combined report. So it is not just about pulling together your financial statements and your sustainability disclosures, but actually it should be really integrated in nature. So when we refer to integrated report, we have to think about a concise report that actually tell the value creation story of an organization, looking in the past, so the past performance of the company, but also looking into the future. And this is actually made on the base of the 6 capitals, so not only relying on the financial capital, which is an important one, but also thinking about all the other resources and relationships that a company or an organization depends on and have an impact on. So it is important that this is not seen as a reporting burden, but actually it relies on information that the company has already and actually it publishes. So when you think about integrated reporting, you have really to think about the investor first read, understanding how the organization will continue to create value over time. Using a metaphor, it is to some extent like when we drive a car. We don't want to look only backwards, but actually we also want to look what is in front of us. And this is actually the same when it comes to integrated reporting. Another important aspect to highlight is the role of integrated thinking, because in fact, integrated report is prepared or can be a trigger for integrated thinking, which is meant as the breaking down of organizational silos to come up with a unified story of value creation. And this is because in order to tell a unique value creation story, also the organization has to work as an holistic system. To actually quote Professor Judge Mervyn King, he used to relate this to how an orchestra actually plays together. So in order to be able to play a symphony, all the various players in the orchestra has to play and learn how to play together. And this is exactly the same when it comes to integrated thinking and integrated reporting. Going now to the second point, where it originates from. So actually we have to go back to 2010. So right after the 2009 financial crisis, where there was a lot of unsatisfaction about reports not providing relevant information to users. And that is when, in August 2010, actually, the International Integrated Reporting Council got together, was established, and actually thought about developing a framework to help companies providing relevant information about the value creation story of an organization. In 2013, we actually achieved the publication of the Integrated Reporting Framework, which is a principle-based framework to guide companies preparing an integrated report. And actually through consolidation, first with IASB, and then a couple of years ago, we had consolidation with the IFRS Foundation. So how it has evolved over time to its current stage. When we joined the IFRS Foundation, the Integrated Reporting Framework became an active asset of the foundation. And actually, Nick is going to tell us more about how the Integrated Reporting Framework is now considered as a relevant resource within the foundation. And it is also to be bear in mind that it is a framework that the ISSB standards as well have been leveraging on, especially when it comes to the concept of connected information and value creation, both in developing IFRS 1, but also in developing IFRS 2. So to your last part of the question, Jonathan, why this is important and how this is related to the ISSB standards. It is important to note that the framework and the ISSB standards can work together, because the former provides an architecture that companies can rely on to structure their report for decision useful information on value creation over time based on 6 capitals. And the ISSB standards are more detailed and can help populating the report with comparable and investor-focused information. And here, actually in the chat, we have provided useful resources that explain how the IR framework and the ISSB standards actually complement each other, helping organizations enhance connectivity between their financial statement and the broader disclosure. So please feel free to explore this material. And if you have any question, please drop them in the Q&A section. We would be really happy to discuss this further. Back to you, Jonathan.
Thank you so much, Laura. And I would really emphasize your final point about our participants really having a look at these resources that have been developed and also feeding back to us on the quality of those resources, and if they would also value any further resources to be developed. We are always looking for feedback and insight from the market on the resources that we provide. And Laura, I think your description of where we've come from and where we are really does position our discussion perfectly today, especially in relation to the evolution of the governance of integrated reporting from a standalone organisation now within the IFRS Foundation, and the governance of the integrated reporting framework in particular. And I think this really does help us now to move to Nick Anderson, to Nick. How do you see, Nick, the IFRS accounting standards corresponding with and also enhancing integrated reporting? And what role does the IASB play in encouraging companies to adopt integrated thinking?
Thanks, Jonathan, and hello, everyone. Delighted to be joining the webinar today. I'm going to start, first of all, by just going back to think about the difference between integrated reporting and integrated thinking. The two concepts are often mentioned together, but they serve distinct purposes. So I like to think of integrated thinking as it's a mindset. It's a process that connects an organization's resources, its relationships, its functions. And it's really important because it helps to break down silos, it fosters collaborations across organizations, and through that, it encourages long-term value creation. Integrated thinking, on the other hand, is a structured communication of those insights. Importantly, it provides a concise and holistic view of how an organization creates, preserves, or erodes value over time. So in a nutshell, in summary, we can think of integrated thinking as what happens inside the organization, while integrated reporting is how that is communicated to the world. So addressing your precise question, the bigger picture in terms of how does integrated reporting and IFRS accounting standards work together to improve, I guess, corporate reporting and enhance how companies communicate their value creation story, I would firstly say integrated reporting provides the framework. It acts as an architecture, it structures, it helps communicate an organization's story of value creation, preservation, or erosion over time. The standards, IFRS accounting standards, they introduce specific financial presentation and disclosure requirements, ensuring that financial performance is measured and reported on a comparable basis, alongside with information about the related risks. And so the standards help embed financial reporting within the broader narrative, I guess, of value creation provided by integrated reporting. And through that, it helps to provide better connected information. And so if we think about from the perspective of investor relevance, integrated thinking provides the narrative and the structure, while the IFRS accounting standards ensure companies provide consistent, comparable, and decision-useful financial information. Now, I think beyond reporting, the IASB, our board, also supports or plays a role in supporting integrated thinking and ensuring that financial reporting aligns with broader corporate strategy and decision making. And so in some respects, we set a global baseline for accounting, for reporting. The ISSB's accounting standards improve that consistency, that comparability across markets. Our standards are required in 147 jurisdictions today, and that makes it easier for investors and stakeholders to assess companies. The second thing I'd say is it encourages integrated decision making. Financial reporting seeks to reflect corporate strategy, the risk management. We want companies to move beyond compliance in their reporting towards integrated long-term value creation. It provides guidance and support, and a couple of initiatives here, particularly the work our board's been doing on the management commentary practice statement, and that will help organizations navigate this transition, ensure alignment between integrated thinking and financial reporting. So I think there's a great deal going on here, and it really enhances our own work.
Thank you, Nick. And I think you've really brought out there in those insights the relationship between integrated thinking, integrated reporting, and the standards. And I think really kind of amplify the value of having the integrated reporting framework, integrated thinking principles as part of the IFRS Foundation to really improve the quality and value of the quality of information that is presented to the capital market. So thank you for that, Nick. I think it's really valuable insight. And I'd like now to turn to the panel for their views on integrated reporting and integrated thinking. And we're delighted to have representatives from really different parts of the corporate reporting ecosystem. We've got the ESG Exchange that supports businesses in capacity building around good governance and decision useful sustainability information. And then we've got IFAC, the International Federation of Accountants, representing the global accounting profession and assurance providers. And I'd just like to remind our audience that after an initial round of comments, we'd also love to take your questions, and that we've dedicated some time to ask our panelists your questions. So please do submit them in the Q&A box. And I'd also like to just remind everyone that the slides will be sent to all participants after the webinar. And you can always email the team capacitybuilding@ifrs.org. So Carolynn, starting now with the ESG Exchange, and you as CEO of the ESG Exchange, how does integrated reporting enhance governance practices within organizations? And what are some of the key governance structures companies should establish for effective reporting? Carolynn, over to you.
Thanks, Jonathan. The ESG Exchange is a project of the Good Governance Academy, hence my title there. So thank you very much for that. I'm going to talk a bit about the integrated reporting as pertains to the IFRS, the integrated reporting framework. So Nick was speaking about integrated reporting, and I know other people have been speaking about integrated reporting with a capital I and a capital R, or a little I, a little R. So really, from a governance perspective, I'm going to be speaking about integrated reporting as pertains the IR framework, and that really is the voice of the board or the governing body. It enables the board to be heard and to show its accountability, its fiduciary duties, accountability for and to the organization, the company. It's the board's communication about matters and information that really substantially or substantively affect the organization's ability to create this value. We also need to think about eroding and preservation of value, but over the short, medium, and long term that Nick was speaking about. So an integrated report and integrated reporting, according to the framework, is a fundamental component of an organization's governance, corporate governance practices. So if you think about the governance practices, that governance involves not only setting the tone for the organization, setting direction, and it's really involves delegation. And then through that delegation, obviously the accountability is the oversight. Since this integrated report is the board's report, it then follows that these principles, it follows these practices, the board's delegates the report preparation while always maintaining accountability through the oversight of the preparation of this report to ensure the report's credibility and reliability. And both Laura and Nick mentioned that the availability of the IASB standards in accounting and the financial reports, as well as the ISSB information, certainly provides that credibility and reliability to the integrated report. And we do talk about the integrated report being an octopus structure, really where the integrated report, according to the IR framework, is the head of that octopus. And these various reports, the sustainability disclosures, related disclosures, and the financial statements are the tentacles that really feed in to this head, this integrated report. This integrated reporting, and Nick mentioned integrated thinking, really drives more than just reporting in the organization. That tone from the top, the direction from the board, fosters integrated thinking, as Nick mentioned, by the board, but also through the board. This permeates through the organization, enhancing this voice of governance and decision-making, and this integrated nature, not only thinking about short, medium, long-term, past, future performance, but also those important 6 capitals that Laura was talking about. Case studies do show that organizations publishing integrated reports show these benefits in improved financial stability and viability over time. So although you're talking about 6 capitals, really, it's that integrated thinking, the voice of the board driving that integrated thinking through the organization with these individual reports, be it tax transparency, sustainability through the ISSB standards, the financial statements through the IASB standards, that then provide this financial stability for the organization and continued viability over time. So a very, very important tool for organizations.
Thank you, Carolyn. And it is certainly our experience that the business case for integrated reporting is significantly enhanced when the business or organization sees integrated reporting and integrated thinking as a governance tool rather than as simply a compliance tool. And you see the payback, if you like, of the investment in adopting integrated reporting and integrated thinking comes so much faster if it's seen as part of good governance rather than as part of, simply something that has to be done because it's a compliance exercise. So I think we would completely agree with your analysis, and agree as well that it's backed up by evidence, which is really important. Just building on that then, Carolyn, what are the best practices for ensuring sustainability disclosures provide meaningful, decision useful information for investors and stakeholders?
Thanks. I'll start with governance because we've just been speaking about it. So the IFRS Sustainability Disclosure Standards highlight governance as a key area. It's coming through from the TCFD, the Task Force on Climate-Related Financial Disclosures, governance being one of those pillars. So it is also a core element of integrated reporting. So connecting governance to sustainability performance and the indicators that go with that, that's one of the practices that's really quite important. It's a very, very important governance tool, and using that tool through these different elements certainly is something that we need to practice. Another area of practice, of course, is the information itself. So the information that sits in these reports, and best practices should guide data from sourcing the data in sustainability context, which we know that the IFRS standards, the S1 and S2 do give us some reliefs because information and data is very hard to source in terms of the disclosures required. So qualitative and quantitative information. So there is a best practice we need to pull through from that sourcing all the way through to publication to make sure that that information is decision useful. So practices around governance, practices around information. We are talking about integrated reporting, so we'd also need to consider how that data connects across the capitals. So the financial capital, natural capital, but also capitals including the stakeholder relations, so that the human capital, stakeholder relations capital, the capital the manufactured capital. So all of these different capitals, we need this information to be available to us. So we start maybe with the climate data. You'll see how difficult it is to source that information. Now we really need to focus on the information available for those reports from those different areas. So you can see how just the act of generating or creating an integrated report at a board level really drives that thinking in practice through the organization and provides a reader with that integrated perspective. But to be meaningful and decision useful, we really need to understand that reader's perspective. So we know that stakeholders have different interests and different perspectives and different information requirements. So stakeholder engagement is an essential practice to deliver that right information to the right people at the right time. The IR framework is really for the providers of capital, for the organization's providers of capital, and sitting in the IFRS Foundation now certainly underpins that in terms of the providers of capital. But boards, this is the voice of the board, and it's about the discharge of your fiduciary duty. That might not be the only material aspect that needs to be disclosed in an integrated report. So that stakeholder engagement beyond just your providers of capital is going to have to be an important practice as part of this. I think I just touched on 3 practices there. They can be in the questions we can talk about more.
Carolynn, that is so helpful and very practical, and your replies, as Laura and Nick before you, have inspired lots of questions that are coming in in the chat box. So please do continue with those questions, and we'll turn to them in a few minutes. But now let's turn to Stathis Gould from IFAC. And Stathis, I wonder if you could describe how IFAC and the accountancy profession are contributing to integrated thinking and integrated reporting to improve decision-making and corporate disclosures, please.
Thank you, Jonathan and team. It's a great opportunity to be with you, representing the global accountancy profession. Where I'm going to start with this is as the global voice for the accountancy profession, so representing 187 member professional accountancy bodies around the world. I think one of the main things that we really are trying to do through our network is advocate for that comprehensive global corporate reporting system based both on IFRS sustainability disclosure standards, S1 and S2, of course, as the global baseline for sustainability disclosures, and also the integrated reporting framework. These things are just really foundational. They're foundational for enabling a focus on both driving better information internally to enable business resilience, as we've been talking about, and also decision useful information for investors. So global companies and investors really need this global approach based on these international standards and the IR framework, and that really is needed to reduce, I think, both compliance costs and to support companies to focus on their business models being more resilient, more sustainable, and creating long-term value for companies and investors. So ultimately, this comprehensive corporate reporting system is just so critical, because really the reporting has to help companies transform, to adapt and do things differently, particularly as we've discussed, bringing about integrated thinking in governance and management practices. So it's the ISSB standards used in conjunction with integrated reporting that really, we believe, provide the opportunity to facilitate integrated thinking. And as Nick said, connecting information and reporting on sustainability risks and opportunities with financial information and reporting. So our global advocacy involves actively engaging our members to advocate for local roadmaps to enable the adoption of the ISSB standards in conjunction with IR at a regional and local level. So really driving that global system down into the regions and local jurisdictions. Everything has to be connected at the end of the day. Secondly, we're working with our members to support finance and accounting professionals on boards and as CFOs and in finance leader roles to understand their role in integrated thinking and sustainability and integrated reporting. Obviously, the majority of accountants work in business. On almost every board of every company in the world, there's going to be at least one accountant. And of course, accountants work both in finance functions and also as assurance providers and auditors. So they've got immense influence in how to evolve governance and management practices to bring about integrated thinking. I think there's two elements to this I would highlight today, and much of this also depends on the role that and the perspectives that one's coming at in terms of finance. So obviously one element is connecting financial and non-financial information to provide that holistic view of performance, risk, and opportunities, and that's really important to inform planning, prioritization, and financing decisions. The second element is the controllership function, which is really focused on enhancing the quality of sustainability information and integrated reporting. And that's really essential in delivering robust governance, internal controls and assurance processes to improve reliability. So we've published guidance actually on governance and controls for enhancing the quality of sustainability information and its assurance readiness. And this is available on the ISSB's Knowledge Hub. And I think it's also useful to note that many of our member organisations, such as the AICPA CIMA, are providing thought leadership and learning opportunities, such as around integrated performance management, to help really finance people to think through how they connect strategy to execution and get that alignment, as Carolynn referred to, from the governance, the board level down through the organisation. And lastly, I'll just reflect on the importance of capacity building in the finance and accounting community. Is really a big priority for us. That's partly around education, and we've recently updated our international education standards to include learning outcomes for accountants related to sustainability. And we're also partnering with our members to provide opportunities in different parts of the world to increase the understanding of both the ISSB standards and integrated reporting.
Great. Thank you very much indeed, Stathis. And I just wanted to pick up, if you don't mind, on the assurance piece. And I just wondered if you could just explain how you see assurance helping to build trust and credibility in integrated reports and the sustainability disclosures.
Yeah, absolutely. So, of course, I think we all would recognise that reporting standards and regulations are insufficient by themselves to support more sustainable and efficient capital allocation. So third-party assurance provides confidence, I think, to both boards and to investors and other stakeholders on the appropriateness of information that's being disclosed, and that relates both to the ISSB standards and the International Integrated Reporting Framework. Without assurance, there's no practical means of external stakeholders really understanding whether sustainability and other information is credible. So I think it's just so important. And it also, the assurance process and the engagement also helps to companies to develop their internal monitoring and control systems. And the assurance process can reveal risks and deficiencies in reporting systems and any inconsistencies between strategic objectives and operational activities. What's interesting is in our IFAC State of Play research study, which we've been doing for a number of years, that looks at trends in sustainability disclosure and assurance. That really shows an increasing demand for assurance of sustainability information and integrated reporting. But it's also interesting to see there's a profound shift in where companies are reporting their sustainability information. So there's much a decreasing reliance on standalone sustainability reports and a real shift towards greater integration of financial and sustainability information being positioned within annual reports or annual integrated reports. And actually, it's been a quite big increase in the use of integrated reports that apply the international integrated reporting framework. So that increase has been from 21% in 2021 to 30% in 2023. So this greater integration in reporting is also, I think, leading to a more integrated assurance approach with auditors, statutory auditors, primarily undertaking the assurance of sustainability disclosures that are included in annual and integrated reports. And I think it's also helpful to distinguish between integrated reporting assurance, which is assurance of the whole report, the entirety of an integrated report, from assurance that that's being applied to specific parts of a report and specific information sets. I think assurance is actually growing in both relation to entire integrated reports as well as in relation to specific sustainability disclosures. And I'll just also reflect on the fact that together, obviously we've got the ISSB standards. We've also got the International Auditing and Assurance Standards Board, which has issued the International Standard on Sustainability Assurance, ISO 5000, which is now providing the global sustainability assurance standard that I think will help to drive further momentum towards integrated and sustainability reporting assurance engagements. 5000, importantly, provides that global baseline for high quality assurance, setting out the requirements for assurance practitioners to apply in all aspects of the assurance engagement. So that's accepting, conducting and reporting on assurance engagements related to sustainability information. So I think the assurance space is really rapidly evolving, and I think will continue to be important part of not only providing confidence but supporting companies in improving their processes.
Stathis, thank you so much. That's a really, really helpful reply. And I would now like to move, if we can, just a very quick fire question for each of our panelists before asking Nick to make some concluding remarks. So if I could begin with Carolynn, please. Carolynn, we know that cost of reporting, efficiency in reporting is rising up the agenda. It's always been there, but I think it's really fair to say that it's been rising up the agenda recently. From your perspective, how would you describe the cost benefit of a company starting to adopt integrated reporting? What are the issues that companies should be thinking about from a cost efficiency perspective as they begin to adopt integrated thinking, integrated reporting?
Thanks, Jonathan. Really, for me, it's all about reusing management system that already exists in the organization. So reusing the tools that are available to you, the data tools, technology, analytic tools, the participation of people in the organization, the training teams, if there are training teams, but it needs to be, as far as possible, reusing your existing processes. That being said, bringing the new thinking on integrated thinking through the organization is a must. And that kind of education and cultural setting in thinking on an integrated basis is not something that you can quantify. It's not something that you can easily train someone on, but it brings immense value to an organization, immense value. So yes, there are costs associated with it, mainly around the sourcing of that information and the time taken and the effort to prepare it. But we also must, and I was busy answering one of the Q&As here, think about proportionality. You're not going to put a very, very detailed 100-page integrated report together when you're a small company. It can be proportional. As a voice of the board, we need to be pragmatic as well. And the IR framework is written as principles. It's written as principles that you should be answering certain questions. So if you're going to the nth degree and you're spending a fortune on it, I would rethink that. If you are a big organization and you are spending a lot on it, make sure that you've got your key performance indicators or your objectives set on what you're wanting to achieve with spending that money. So it's really in the leadership around an integrated report and the integrated reporting process that's going to determine whether you get an ROI. Thanks.
That's really helpful. Thank you so much, Carolynn. And so just a final question now to Stathis, a really quick and snappy answer, Stathis, because we're running slightly behind time. But the definition of integrated reporting that we've been discussing is compelling today, as one of our participants says. However, in reality, finding really high quality integrated reports can sometimes be a challenge, because our participants are saying that it's just sometimes just putting information together, financial and non-financial information, into one document. In your view, Stathis, how can we make sure that companies really do integrate financial and non-financial information? And is there any kind of auditing of integrated reporting that you're seeing today?
Thanks, Jonathan. Yeah, it's all about connectivity. So connectivity to the strategy, to the business model, ensuring that your value drivers, your KPIs, your key risk indicators, everything is sort of connected, and then that all links up back to what you're trying to achieve as an organization, and your purpose. I think, building on what Carolynn said, I think the focus on what really is important within organizations and what's being managed then gets reported is just so critical. I think where some companies are being more successful perhaps and getting more clarity in their reporting and disclosures is where they've got their thinking organized internally. And a good example of that is where an organization will be sort of gravitating around, say around 10 to 12 key sustainability risks and opportunities. That gives focus, but then you can see other companies, with hundreds of risks and opportunities, and really not having that clarity, unless you get that linkage between how the business is being managed and what's being measured internally, and then what's being disclosed. And I think it's very difficult to have high quality and decision useful reporting.
That's really helpful, Stathis. And I think, yes, providing that line of sight through the business management through to the disclosure is really important. So Nick, if I could ask you the final closing question, which is, how do you see the integrated reporting framework contributing to the work of the IASB in the future?
Nice question, Jonathan. Thank you. The corporate reporting continues to evolve, and in that we see a clear trajectory towards further integration. And in that respect, the IR framework, as part of the IFRS Foundation, it complements the work of the IASB developing accounting standards. As if I give you two specific examples of that as we look forward. Firstly, it helps structure and reporting by connecting financial performance with the broad drivers of value creation. And that's around issues such as intangible assets, including human capital, sustainability risks and opportunities. And these approaches can be useful in influencing our work in projects such as management commentary and the project we've recently started on integrated assets. And the second one is specifically around that project on on intangible assets. Intangibles are very important in the value creation equation today. It's a broad spectrum of resources. We could think of software being at one end and human capital and corporate culture being at the other. And so to report on intangibles, actually, we need to use a combination of information in the financial statements, in sustainability-related financial disclosures, and in narrative reporting. There's no one single answer. It's drawing together that information. And integrated reporters are already providing extensive disclosures in these areas. And that helps. It offers valuable insights as the requirements in our standards are enhanced. But it's just worth stepping back, and I like to think about the role of the investor as gathering evidence from multiple sources. We triangulate that evidence, we verify that evidence, we're trying to form judgments based on that evidence and our own experience to reach investment decisions, buy, hold, sell a security. And then through that process as investors, we're seeking to build trust in management, trust in a company, and ultimately, as an analyst or portfolio manager, trust in our own investment case. It's about belief, and companies that portray a coherent message to the market engender trust. So by leveraging the IR framework, integrated reporting, the IASB can consider how best to further enhance connectivity between financial and non-financial reporting, and that will ensure investors receive a more holistic, a more decision-useful view of corporate reporting over time, enhancing that trust. Thank you.
Thank you so much, Nick. That's so helpful. And I would also like to take this opportunity of thanking all of our panelists today for your insights, and to everyone who's participated and joined us in different time zones around the world. Before we go, we'd just like to remind everyone about some of the key resources that will help you to stay informed and also stay ahead. The IFRS Foundation offers several programs to help you to do this. For example, our website and our Knowledge Hub have more than 200 resources from the IFRS Foundation and third-party partners. The IFRS Foundation Sustainability Alliance, a membership program for education, tools, and peer networking. The Fundamentals of Sustainability Accounting Credential, or FSA, which instills the link between sustainability and financial performance. And finally, our website at ifrs.org, where you can sign up for alerts to find out about all of our news and events like the one today. Please remember that your use of our resources and participation in our programs also supports our mission as a non-profit standard setter. Please do stay involved with the IFRS Foundation, including through this webinar series. Follow our LinkedIn and news updates to learn about the series covering a variety of topics, such as the transition from TCFD recommendations to the ISSB Standards. And you can listen to the ISSB's monthly podcast to stay up to date. So as we wrap up today's webinar, I'd like to remind everyone about the IFRS Foundation's Integrated Thinking and Integrated Reporting Conference on the 3rd of April 2025 in Tokyo. This conference will feature many really relevant discussions, and we'd urge you to sign up to join either virtually, or if you're able to join us in person, you'd be most welcome to do so. There are individuals, colleagues of mine, without whom this webinar could not have happened, certainly not as successfully. So to Neil, to Jarlath, to Lucy, and to Robert, a huge thank you for all your work in making this webinar happen today. I'm Jonathan Labrey with the IFRS Foundation, and it's been a pleasure to host today's webinar. On behalf of the team, thank you for participating, and until next time, thank you and goodbye.